Good evening, I am Ibrahim Sani and you are watching Market Talk. Welcome. The Malaysian derivatives market stands to gain more influence from the foreign and domestic investors. But what is it about the business that is generating so much interest? Here to discuss this and more is the CEO of Kenanga Futures, Azila Abdul Aziz. She's also the head of listed derivatives of the company. Welcome to the show, Puan Azila. I think the core question right now is on how has the derivatives market been for the year, for the first 3 quarters of the year, and heading towards the end of the year, what would be the trends that you are currently observing right now?
Okay. Thank you for having me here today. Now, if I could just take a little bit further, in terms of the growth and development in derivatives market, and probably after that we could zoom in terms of what we have experienced for the year. Growth and sustainability are the 2 keywords in any industry, similar to be said to derivatives, which has grown in a very sound or double-digit growth, compounded annual growth rate of a double-digit, more than 15% thereabouts, since the year 2010 till 2017 to where we are right now. So there has been a lot of changes where we have started to embrace technology since then. The execution for the contract is now hosted in CME in Chicago, and that, as you have rightly put it earlier,
the Chicago Mercantile Exchange.
That's right, and that, as you have rightly put it there, has encouraged a lot of global clients accessing into our Malaysian derivatives. And from there onwards, we are talking about 6 million contracts in the year 2010, and at the record high, we are already today at 14 million plus. Okay. Yeah.
The parallel that I want to draw is on the Islamic debt capital markets when it first grew in the early decades of 2000s because of a low base. The record growth spurred double digits, even triple digits at some papers when it was issued, particularly by strong book runners like CIMB, Islamic, and at that moment in time, HSBC Amanah, as well as maybe Islamic later on. But the growth slowly tapered down. It became a little bit more stable, particularly when Islamic debt papers are now reaching the same growth rate, if any, with the conventional papers. Do you foresee the growth rate that the derivatives market is experiencing right now, particularly on the contracts that is being exchanged, will it taper down soon enough, or is it still going to go strong going forward?
If we look at it again, I would like to take 2010 as the focal point or the game changer for the Malaysian derivatives market landscape. Certainly for any, as what you have put it, any industry or any product that is coming from a lower base would be able to get that kind of growth. And what would be the driver is again technology, and that with technology there'll be changes in regulatory. So I wouldn't equate in terms of, probably they will have a different dynamics in terms of the Islamic markets, but for derivatives, what is the sole purpose of having a derivatives market? None other than to allow establishment or businesses to manage their price risk, and also at the same time as a price discovery. So to answer back your question, yes, for any types of product that is seeing a very strong growth would have a moment where they will see a little bit of transition, and I could relate that to what has happened in 2017. We are seeing a little bit of a moderation in terms of product, in terms of volume growth. 14 million is the key, is the highest point of the number of contracts that's traded on the exchange, but we are seeing a bit of moderation. The answer to that will be a low level of volatility, and that certainly will refrain players from being more trading actively on the derivatives market. But then again, that will not be like a negative factor, because it happens to the rest of the other global derivatives markets that we have seen.
Actually, you touched upon a very good point. I want to benchmark Malaysian derivatives market with that of our neighbours and also around the world. How do we stack up against all these global players? Okay.
Now, without a doubt, as we know, Malaysia, we are operating in an emerging markets. Now, let's go zoom in exactly to Malaysian derivatives. I did mention about the Chicago Mercantile Exchange. From that standpoint, we are considered developed because our matching engine is hosted overseas. Our clients all across the globe, it not necessarily be Asia, it could be from Europe, even the US are already accessing it because of the possibility, the visibility created by Chicago Mercantile Exchange of hosting our product on Chicago Mercantile Exchange. That's developed. Now, from the perspective of product development, from what we have currently, I think at this point in time, if I could just quote, there are 14 contracts which is made available on Bursa Malaysia Derivatives. Without a doubt, a lot of Malaysians are familiar with the top two, index futures and palm oil futures.
Absolutely.
But to be honest, if you relate it again, there's already 14 contracts. But if you compare it to the rest of the other developed futures exchanges, I would say we're still emerging. The glass is still half full, and there's still a lot of potential coming or riding from this development.
I spoke to a few fund managers. When they talk about derivatives, they are only predominantly concerned not just about the index futures, but predominantly about the CPO futures. Do you think that this is the only offering that we can have right now? What about other future contracts? Do you think that...
Okay, out of that 14 contracts, okay, I would say, why I would relate it to emerging, because there would be a lot of room for growth to actually make the inactive contract more active. Global futures exchanges across the globe has issued many types of contracts, and in any distress condition, for example, there would be a contract that they would like to roll out, be it on listed or even, can I introduce the word now, OTC derivatives. Now, with a lot of ruling that has taken place in the US, Dodd-Frank, I'm sure you've heard of all those. Yeah, so all those has actually made a lot of this bespoke derivatives product become more listed kind of ability where everything is transparent now.
Yeah, but the thing is, regulatory plays a key feature here. Currently, do you believe that the regulatory features that we have right now facilitate an OTC futures contract to take place?
I would say this. US has been the first country that has rolled out a lot of extensive regulation coming out from a global financial crisis. That's a natural reaction. Being a country like Malaysia and the rest of the other Southeast Asia regulators, I think we are very supportive to that development. Without a doubt, we have not reached that certain scale in terms of developing our derivatives market. But at some point, something which is medium in size could grow to a larger size. So along the way, we are adopting somewhat, alongside with whatever that is being introduced in the US. So to answer, yes, supportive, and we have not seen what they have experienced. So I think it's a good thing that we can explore, and probably at some point, OTC could be part of it.
Yeah, let's talk about the timeline of your expectation of OTC derivatives taking place here in the market. But we'll take a short break. But when we come back, we'll discuss more about how the regulators can play a more important role in the derivatives market. Don't go anywhere. Welcome back to Market Talk. I'm your host, Ibrahim Sani. Today we're taking a look into the derivatives market. Joining me is Azila Abdul Aziz, Head of Listed Derivatives of Kenanga Futures, also the CEO of that firm. So when we left off a few minutes ago, we were talking about the regulators and how OTC derivatives could be seeing a light of day here in this part of the world. Do you have constant conversations with the regulators out there, particularly with SC in particular?
I would say that that is being a member firm of Bursa Malaysia Derivatives and being licensed under Securities Commission, definitely there will be industrial engagement. In addition to that, we as a company, Kenanga Futures, we cater to about 65% of our business comes from global clients accessing into Malaysian derivatives. And from there, we have involved in a very extensive dialogue, especially so when clients who are domiciled in the US and where they have very much, can I introduce CFTC now? Yeah, of course. Which regulates the global derivatives markets as well, alongside with CME. There would be certain conformity or compliance that needs to be done by our client, and that is a pass-through to a Malaysian broker like ourselves or their agent. So I would say that we keep ourselves abreast with any of this development and changes that is happening.
Just like the fintech industry, when you involve technology, you cut out the middleman, you cut out the broker's method of earning an income. Do you think that brokers like yourself, Kenanga Futures and the likes, face a very bleak future when it comes to technology, when investors can immediately log into the CM exchange and do the dealings straight up one-on-one without the need for any brokers in between?
I would say brokers will be here to stay. Now, why I say this, in 2010, let me repeat again for that focal point here, we have actually embraced technology, trading and technology. In fact, derivatives market was the first to go electronic, where after that, once that has taken place, the requirement for global clients to access into Malaysia it has to still be via a local broker. Although the trading aspect can be connected directly via the various hub. So we have embraced that. We have incorporated trading and technology. Then comes all the algorithmic sophistication in the market, where clients will run machines and start accessing your markets. Rather than going through a broker infrastructure, they can go directly. But in order for that to happen, they still need to have a documentation or paper with a Malaysian broker, because part of derivatives, which is not the same as securities, is that every trade, once trade is executed, it has to be cleared. So that is the aspect needs to be in the puzzle.
And with this in mind, do you see your firm to carry a little bit more value add in terms of advisory, in terms of market outlook, and how you advise your respective clients?
Okay. We have evolved. Ever since things has gone electronic, without a doubt, we do see pressure in terms of commission structure and so forth, but our dealers have stepped up to be more sales trading. We will be more advising customers in terms of how to access, and more of a solution provider in that context. So technology is something that we have embraced at the early start, and we are looking forward to that. Now will be more towards offerings even on your smartphones. Yeah, you can access many markets on your smartphones, but the question is whether how much of risk management that you have put in place in terms of pre-trade as well as post-trade.
Let's talk about risk management then. Because of the very nature of the globalization of the derivatives market, a lot of your investors, both foreign and foreign and domestic, would need to manage risk currency. Do you think that the fluctuation of the ringgit movement have had any impact on the way you do business for this year?
Certainly. When there's volatility, it will definitely impact any asset class. So when it comes to a customer or when it comes to an establishment or corporation, they would need a reliable curve or a reliable futures market to lay off some of these risks. Okay, and we have seen in 2017 a lot of other currency futures has gone through quite wild swings, given the strength of the dollar and so forth. So Malaysian ringgit is also part of that journey, I would say. And we have seen the quite a wild swing is what we have seen. So for now, in 2017, if I could just relate back to some of the discussion that we had earlier, obviously ringgit, we have seen ringgit at its worst point. But what we are looking forward to as a Malaysian broker is to see whether there would be window in 2018 for Malaysian Bank Negara to have a bit of to build a bit of avenue for players to hedge ringgit onshore. Which is currently we're seeing a little bit of a bright spot based on some of the latest ruling that has come out recently, which enables non-bank to participate in ringgit hedging onshore. So we are quite excited about that.
Bank Negara made a big furor against onshore and offshore trading and hedging of the ringgit. What would be the enticing factor for Bank Negara to allow for onshore hedging?
Okay, we've heard about the dramatic news about MTF and so forth. So I believe it is a normal reaction for any central banks as well when they see such a weakness in the
actually
onshore currency.
The Malaysian Central Bank, other central banks, Singapore and the likes, they do not overreact, if I may use the word, towards such measures. Why do you think there was such a dramatic reaction coming in from the Bank Negara?
Okay, let's look a little bit of a history here, right? In 1997, for example, let's take a little bit of jog our memory at that point in time. Malaysian ringgit is not a restricted currency, meaning it is tradable offshore. So there are ways when foreigners starts to trade or even invest in any of the Malaysian asset, they would definitely need to hedge their currency exposure. So that was a route before, and that's why you see a lot of movement in the ringgit. Post 1997, ringgit was pegged, and then comes under managed float. So again, it is a restricted currency. Now, from that point in time, 1998 onwards till 2016, a lot of foreigners have actually found a solution in terms of how to lay off their ringgit or currency exposure, and none other than the offshore non-deliverable
Yeah.
forward.
Yeah.
So there could be I mean, there is a lot of big words which is a little bit scary in the
It's
market
okay.
speculation and so
NDF
forth.
is bandied around.
Yeah, for now.
Yeah.
But so now what has happened is that a lot of global clients, based on our conversation, they are still excited about Malaysia because Malaysia is still, there is still a weight in MSCI, for example, and so forth. As long as Malaysia is still on the radar, there is still a need for players to come in and have access into Malaysian assets. But the only concern here is how do they get
what the returns?
dollar neutral on this. So in other words, they need to have a curve to hedge their currency exposure. So these are the things that I think Bank Negara is slowly coming out with some new regulations or easing of regulations to enable that to happen in Malaysia.
Part of the allure being tagged as an EM is on the perceived higher dividends and or high yields that an investor can get. Do you think that Malaysia offers that kind of premium going forward?
That is good. I guess I'm not in that position to answer on dividend, but I do read, yes, it is good. But at the same time also, there must be a way for global clients to access and hedge the currency exposure. So that was one of the factors that impacted some of the trading in some of the contracts that we see. The absence of an active curve to hedge currency.
Okay.
Yeah.
Azila will take a short break, but when we come back, we'll discuss a little bit more about some of the products that they carry. Don't go anywhere. Welcome back to Market Talk. I'm your host, Ibrahim Sani. Today I have with me Azila Abdul Aziz, the CEO of Kenanga Futures. Azila, let's talk about your firm right now. What developments are currently expecting out of your shop and perhaps the things that we can be excited about going into the next year of 2018?
Okay. We talked about foreign accessing a lot into Malaysian derivatives, and that's where our core business has been over the years. I think for the past 20 years, that's been our main DNA in trying to encourage or lure inbound businesses. Now, what we see along the way is that we note that the participation from Malaysian trading into Malaysian derivatives market can still be improved.
Okay, that's a polite way of saying Malaysian investors are not.
Well, I would say that but I wouldn't say that we are still dormant, because if you look at the demography, prior to every time when I speak to foreign customer, prior to them accessing into the Malaysian market, they would also want to see whether there's a readily domestic liquidity, and the answer to that is a yes, because Malaysian they are trading into BMD markets accounts for almost more than 60%.
Okay, but of course, for the equities market in general as well, Malaysian investors are not particularly active there as well. And of course, as Rawani is inside the building of Bursa Malaysia, you know, we can actually have a chat with Bursa Malaysia, and they too can concede to the fact that Malaysian investors are not playing that much in the equities market. Because of this endemic that is currently happening right now, it's nothing wrong about the derivatives market, because foreign investors are indeed looking into it. What would be I guess the symptom and the cause of these investors, Malaysian investors, not participating in both the derivatives market and the equities market in general?
I believe understanding. If you look at some of the statistics, financial literacy in an emerging market, Malaysia specifically, I think it still needs a lot of improvement. It's about probably to the tune of about 35% to 40%. In a developed market, it could go as high as 60%.
I see.
Yeah. So we need more of those. We need people to understand it's not about investing in Malaysian derivatives. It's about trading. It's about buying and it's about selling. And also at the same time, there are people who come in to manage their risk. So I believe that's why we are here today as a Malaysian broker who has been in the establishment and who has actually created a lot of footprint outside the country, where our clients are mostly domiciled in the US, in the UK, in the Europe, and also Asian side of things. So we have encouraged them that there is a Malaysian product, it is workable, and that's where you can come and lay off your risk. But what I want to do and emphasize more, or we want to do as a company, is to encourage more Malaysian to understand it. You take Korea for example. Korean, when it comes to Korean exchange, they have a lot of interest from their local players, and that has encouraged even more liquidity from global side of things.
Okay.
So volume begets volume. So these are the areas that we want to beef up more.
I wanna focus a little bit about your comment on the financial literacy. I don't have the figures with me right now, but the amount of Malaysian investors currently investing in the Singapore equities market can be considered quite sizable. So does this mean that it's not just about financial literacy, it's about the interest in investing in the domestic market? Because Malaysians are investing in Singapore, but they're not investing here. Do you think that financial literacy is not about the issue, it's about something else?
I wouldn't want to comment much on that, but I look at it in terms of, for example, if you have a range of product spectrum, you have investing in bonds. People understand that.
Yeah.
Investing in securities. But sometimes people misjudge it, investing in futures, which is not correct. You see? So it's all about trading, like I said. So when you understand it more, you understand it's a leverage game, which means that your returns could be, can I just use the word loosely, explosive? Yeah, because high risk, high reward. Yeah. So when you understand that even more, you would be able to use it even more effectively. So we continue to emphasize upon a lot of Malaysians. We do have individual customer, high net worth individual. We do have corporations, producers of palm oil. For one example, corporations.
Yeah, okay.
Palm oil plantation companies who actually lay off risk and knows the use of a reliable curve that is made available on the listed side of things. So basically, we will educate Malaysians to know, number one, product.
Let's talk
know
about
your product, know your regulation, and also know your market well.
Let's talk about passive investing in derivatives market with robo-advisors and the likes and fintech again coming to the picture.
Okay.
Do you think that the very nature of how we do business in derivatives market is going to change very much in the near future?
I would imagine this. It has to be embraced at a gradual pace. Okay, the hot topic right now, Bitcoin.
Oh God, okay, yeah.
Okay, Bitcoin. Yeah, everybody talks about it.
Yeah.
Is that a regulated market, may I ask you?
No, it's not.
It's not, right?
Yes.
So, of late, I'm sure you can Google it and you'll find out that CME is going to launch the futures for Bitcoin. So imagine this. Again, let us relate back to derivatives. Every asset needs a derivatives.
Yeah, absolutely.
Yeah? So why do they come up with a futures market? Because they need to know what would this Bitcoin prices would be in the next 3 years or in the next 1 year. So that's why they have a reliable curve. And I would like to also lure a bit of attention in terms of good derivatives where the contract is specified.
Oh, sorry, there's
it's
bad
cleared
derivatives?
under exchange.
Yeah.
I mean, I'll be subscribing more to good derivatives because we do not originate the product.
Okay.
The product is originated by the exchange. It has a standard tenure. It has a standard settlement and so forth. You come in as a buyer, you will be guaranteed there is a seller to every trade. So that is the beauty of trading listed derivatives.
One last question, and it's a rather operational one. Does it cost a lot to do a trade with the CME? Is there some form of premium pricing in terms of using the exchange over other exchanges?
CME markets or Malaysian derivatives markets?
Malaysian derivatives market in Chicago.
It's still the same. The product belongs to Malaysian, belong to Bursa Malaysia Derivatives. It's just that it is executed and matched overseas.
Okay.
So futures, you don't pay the full amount, like that's what you pay for cash.
Until it's executed.
It's just a fraction that you put in order to get that big of exposure.
Great, thank you very much. I've been speaking to Azila Abdul Aziz, Head of Listed Derivatives and also CEO of Kenanga Futures. Unfortunately, we've run out of time, and that wraps up this episode of Market Talk. Be sure to follow us on Facebook, Twitter and Instagram at 501 Awani, and download our app on the Google Play and the Apple App Store. Remember, you can always listen to this interview on your podcast. Simply search for Market Talk or Astro Awani wherever you get your podcasts. I'm Ibrahim Sani. Thanks for watching and goodbye.